This is the closing bell for Tuesday, March 17th. What a day on the local exchange. The ASX 200 has managed to snap a three-day losing streak, closing up 0.36% at 8,614.3 points. Now, if you only saw the headline, you'd be confused. The RBA did just hike rates by 25 basis points to 4.10%, the second hike in a row. But the market isn't reacting to the hike. It's reacting to the 5-4 split vote. 4 board members wanted to hold steady. That razor-thin margin tells investors that the hiking cycle is likely gasping its last breath, and that sent a wave of relief through the banks. Now let's look at the actual winners and losers among the blue chips today. It was a classic risk-off shuffle, but with some massive individual moves in the ASX 200. The top gainers, gold stocks didn't just shine, they exploded. West African Resources, WAF, was the standout, surging 5.6% after posting a massive 130% jump in net profit. Following close behind were the yield-sensitive players. Challenger, CGF, jumped 3.52% to close at $7.95. Challenger actually got a boost from the macro chaos. They lowered their takeover bid for Pepper Money, citing the deteriorating operating environment. Investors clearly loved the move to keep cash on the sidelines. The heavy laggards. It was a rough day for growth and tech. Zip was the day's biggest anchor, diving nearly 3.46%. Pro Medicus, PME, also felt the heat as yields rose, joining the sell-off. The blue chip fade, Woolworths, wow, couldn't catch a break today, slipping 0.6% to $35.83. Despite being a defensive staple, investors are worried that today's RBA hike is finally going to hit the checkout line. And then there's Xero, XRO. It extended its tech wreck slide, falling another 1.72% to close at $77.62. In just 7 trading days, Xero has now wiped out almost 10% of its value as the market flees high-valuation tech. Moving to commodities, and the Strait of Hormuz factor is the only story that matters. Brent crude oil is holding its war premium at US $105 a barrel as supply disruptions in the Middle East intensify. This is the double-edged sword for the RBA. Higher oil means higher inflation, but it also pumps up our energy giants like Woodside and Santos. Gold is the weird one today. It's steady around $5,020, but it's fighting a battle between safe haven demand and high interest rates. Usually gold flies during a war, but because the war is causing inflation, which causes rate hikes, the gains are being capped. Iron ore remains the weak link, sitting at US $105 as China's steel demand stays cool. So, the takeaway for today? The market just looked the RBA in the eye and didn't blink. By pricing in a 4.10% rate but seeing a divided board, the ASX has shifted its focus to a may-hold narrative. Tomorrow, we pivot to the US Federal Reserve. If they follow the RBA's lead and sound even slightly cautious, this relief rally might just have legs. Thanks for watching the wrap. Drop a comment below. Do you think the RBA is finished, or is that 5-4 split just a temporary pause? Don't forget to like and subscribe, and I'll see you tomorrow morning for the open.